Welcome to the Dividend Talk podcast, episode 117, our third quarter portfolio results. Hey guys, welcome back to another episode of Dividend Talk. Today, European DGI and I will talk about our portfolios and how they performed in the third quarter. All that and more. See you on the inside. Yay, what's happening, European DGI? How are you?
Really good, a bit exhausted from the weekend. I've been really busy lately. So people that have been following me on YouTube, for instance, they haven't seen a video in the last 2 weekends because I've been just too busy with private life. But I'll be back soon again, of course, back in the rhythm. It's just, priorities. But how have you been doing?
Yes. Hey, look, sometimes life gets in the way, doesn't it? But look, I'm the same. I'm back from holidays. I was in Malaga last weekend, as you know, and it took me 2 or 3 days to recover, and then I was straight back into work. So we're recording this a little bit later. I also had a work night out on Friday, which honestly, after the weekend in Malaga, I did not think I could drink anymore. I'm pretty sure the shares of Diageo should be through the roof because I drank my body weight in drink over the last week and so. But I'm looking forward to this. I'm looking forward to this. Getting straight back into the podcast gives me some routine, gives me some focus. So I'm excited to hear how actually you did over the last quarter.
Yeah, definitely. And I must say, although there's a lot of action going on in the stock market, I'm just so busy at work, and all the stuff that's happening is during trading hours. So when I'm at work, and that's when stuff is happening. So I really need to read up in the evening. But it's tough sometimes in these busy times.
It is, but it's not always a bad thing because of the volatility. I mean, if you're stuck to your phone, stuck to Twitter, stuck to the financial markets, you're following things.
True.
Sometimes you make rash decisions. Sometimes it's better to come in late, have a bit more of a rational mind, say, okay, I missed that. I'm happy I
Yeah.
missed that, and have some time to think. But there's a lot happening. The market there's no respite really, is it? It's crashing.
But I give you an example, right? I've got still an option outstanding on Intel at 35. So it's now
Yeah.
25, right? So I want to roll it over, let's say half a year forward. So I reduce the loss on that and then buy it at, I don't know, 30 or something like that. But, I don't even have time for that. So I really need to do it because in 2 weeks or maybe this week, actually the option will expire. So I still want to quickly do it before I take a heavy hitter on that one, because if I take it at this price, I'll probably lose, a significant amount of my option profit from this year because I
Yeah.
don't trade so much. So yes, I will roll it over tomorrow. I mean, if I don't forget in the evening. So that's the thing with option trading. It's not a good thing to trade in the bear market. But I had this option just before everything went south. So it's the risk of the game. I'm not complaining. And otherwise, I just own 100 shares of Intel at 35. So be it.
Look, exactly. If you have to hang on to it for another 20 years for it to recover,
Yeah, that's not bad.
why not? Why not? But hey,
Yeah.
let's get into our portfolios in a few minutes. Let's look at
Yeah.
some of the news around the world. There's quite a bit happened last week. I tried to stay away from a lot of it, but I do know that the jobs report came out, which do you know what? On the face of it, it didn't look too bad, but then you never know with this market. I mean, you kind of get something that sounds okay, and the market crashes. It's actually like in when we had the
Mhm.
real big run up. There was always bad news, and the market would go up, and everybody's like
Yeah.
scratching their heads. And now it's the reverse. It seems like no matter what happens, the market
Exactly. I mean, and in the bull market, when the jobs report is hot, they're saying like, awesome, yeah, let's get going. The economy is in full steam. And now it tanks. I mean, I can't take shit anymore from this. I mean, I take the opportunities. Let's say it like that. I take the opportunities.
Yeah. I mean, I was doing some reading. I can't say I understand it all 100%, but it's kind of counterintuitive in that the investors were expecting worse numbers to prove that the interest rates hikes working and
Yeah,
that inflation is finally going to drop. So because the numbers were better or in line as expected, they don't feel like the interest rates are going to work, and then that inflation might not drop. So then the market tanks. You're just
yeah.
like, I mean, it's a crazy, crazy world we live in.
So if this is the trend, right, then probably we get a more expensive dollar again in a week from now or 2 weeks from now, because that's been the trend. Every time they raise interest rates, the dollar becomes more expensive because Europe is so slow in their following. So it becomes even more painful to buy those American stocks.
I haven't checked what it is. Do you know what it is off the top of your head? Is it?
98 cents or something like that.
Oh man,
Yeah,
how much,
exactly.
how much stronger can we get? I mean, it's getting close to the point where it's hard for us as European investors to invest in these companies in America because it's just getting too expensive.
Well,
Even
but you only say that when you're price anchored, because maybe we'll never get back to 120 that we're used to.
yeah, that's true. Actually, maybe,
Maybe
maybe,
it's really cheap now compared to where it will be in 2 years.
maybe.
Maybe we will be like in Turkish lira.
Let's hope to God it's not like that. But on the other hand, you get more bang for your buck when you get dividends. So the ones that we
Yeah,
already have will pay us a little bit more handsomely.
true,
Maybe maybe I wish I bought more of them are sitting at 120 and not a parity though.
true.
Let's move on to some European news. I know there was some price action with Castellum. I don't understand the ins and outs,
Yeah. I
but
mean, the issue is like Castellum is not hitting the English press, let's say in Europe, right? The English speaking press. So
yeah,
we need to do it with Swedish press because the stock went like 10% down or something like that on was it Monday or Tuesday, and I felt like, what the hell is happening here? People know that I'm investing in Castellum, so straight away on Twitter, I had few people reaching out about this, like what's happening. I don't know, but we have Dividend Exe, and later more about him. He mentioned a little bit about it, but what effectively happened. I did a video on Castellum, and I remember reading the annual report that I felt like, wow, this is a CEO that's kind of full of his own ego, let's say. Yeah, and the shareholder letter. I mentioned also in the video, like you can read it when the CEO is full of shit of themselves.
yeah,
So I thought, like, okay, fine. Because he came relatively new in, right? He's been only for a year or something like that. So I thought, okay, let's see, Castellum, well-run company. But what I didn't know, and that's what caught my surprise, is that he's also chairman of the board of M2, and Mia Arnold, I don't know if it's his wife or a family member, is CEO there. And this M2 is, I don't know, is an asset management firm or something like that, and they need to fulfill their financial obligations. So what did he needed to do? He needed to sell his shares. Yeah, so that's why we saw this price action, because a CEO selling a massive amount of their shares is never, never, never good news.
yeah,
The good thing is he sold it to Roger Acelius. I understood that it's like a top-notch investor. So when I heard that, it sounds like the Warren Buffett or Sweden or something from Sweden or something like that. Don't know if they call him like that, but that's how it came across. So from that point of view, in the Swedish investment community, the fact that he sold it to such a guy, like, buy when there's blood in the streets, seems to calm down people again. That's why there was like a price action again on the way up. But generally, what I'm observing lately is that the Swedish housing market is really, really under pressure. Yeah, and you see that from the price action. When you start following Castellum, you hear also about some of their competitors, and it's from the sounds of it, it is really bad. Now, what can you do with this with Castellum? I'm a long-term investor in the company. I have no concern about its long-term future prospects, but the CEO having not a margin call, but needing to sell his stuff to make sure that they can do the bond payments is really not good, and it really, really questions management, right? In Castellum, how this can happen. And you need to feel comfortable with real estate. It's normal in a such rapidly increasing interest rate environment that real estate firms are hit. Yeah, so I'm okay. I'm holding. I actually bought some more this quarter, so I'm feeling fine with that. But it's becoming popcorn time slowly there in Sweden.
Yeah, and do you know what? As an investor on, say, the most western part of Europe, it's easy to forget about what happens over in the likes of Scandinavia, because it doesn't, as you're dead right, it doesn't pop up in the news. So unless you go actively looking for it, it's hard to keep on top of this. Which I suppose is good that we've got some, look, actually quite a large following from Scandinavia, from Norway, Denmark, Sweden, probably helps us to keep on track. But without maybe chatting to some of these guys or seeing what's going on, honestly, I'd have no clue what's going on over there, which is a little bit dangerous. You know, in the United
Yeah,
States, it's always in the news. With the UK, I live in Ireland, it's always in the news. Some of the big countries, Germany, France,
yeah,
always in the news. But when it starts getting to Scandinavia, you're never going to see it, and it's hard to get a real sense of what's happening over there.
yeah,
I only know from the groups, from you and from talking to the other guys, that there's real pressure on the real
yeah.
estate market, which is hard as an investor when you don't live there. You don't have a real sense of what is actually happening. So
Mhm.
that's quite hard. But
Well,
it's
we will see because they will
yeah,
report their earnings in 1 or 2 weeks. So I just collected their quarterly dividend. They're a quarterly dividend payer, and it was so juicy, so nice. So I'm happy with the dividends so far.
yeah,
At least if the numbers are correct, right, what they reported on in the annual reports, then it should be fine. Really, they have healthy ratios when it comes to loan to value, these kinds of things. So I feel actually quite comfortable also looking at FFO, but we'll see. I'm a bit already done with the CEO. I had my gut feeling already when I read the shareholder letter, and if he is able to get in this kind of trouble because also being a chairman at another company, I would rather like to see him already replaced. Yeah,
yeah,
such a person doesn't belong in a company because he will only create trouble.
yeah.
And
I
I don't
agree.
know the guy, right? Yeah.
I agree. Well, you talked about juicy dividends from Castellum, so go on. Let us know, how did you do this quarter?
From a dividend income, I did really, really, really nice. My average over the quarter grew with 47% to last quarter. The biggest growth I have seen in September with 121%, and sorry, in August, and then in September 38%, and in July 20%. So these are good numbers, but specifically August went really, really nicely up. And the nice thing is also these dividends, I mean, they're becoming meaningful now, right? What I earned in a quarter. So it really starts to contribute to my reinvestment scheme. I invested anyway a bit more than I usually do because I brought some. Well, for my bonus, I invested more that I got earlier this in the year. I'm really cleaning up my savings account at the moment to make use of all those opportunities. And yeah. So from that point of view, from a dividend income, it went really well. I bought some Texas Instruments this quarter. I bought some Allianz. I initiated a position in DCC. Probably I was earlier than you in this one. I bought some additional T. Rowe Price. I entered the position in Defama, the CEO we had also in the podcast this quarter. So after this, I put a buy order out, and I believe when it hit 25 euros or something like that, I bought few. I bought some more HPQ, HP Inc. I bought some Siemens. I bought some Castellum, and I bought some more Realty Income. That was my latest purchase. So all in all, with that, my portfolio yield is currently 3.82%. I actually posted this on Friday, and I was surprised that a lot of our followers have like 5%, 6%, 7% portfolio yields. And it made me wonder, like, do I have so much invested also in low yielders, not compared to the kleine kapitalist, right? But it did make me think like a little bit about this. So I haven't concluded my thoughts yet, but yeah. Anyway, I need to do something with that. For now, I'm really happy with it. But for instance, I would like to buy some more Allianz, almost at 7%, as an example. It's a company for me where the dividend is safe. So my largest sector is still information technology, but it has been shrinking over time because I've been buying more in other sectors. So it's now 19.7%. My largest holding remains Shell. It's 8.5% almost now. It was 8% in the last quarter. It's just because of share appreciation. Oil has been doing well. So all in all, I'm very happy with the quarter. Maybe just my portfolio value dropped. It initially spiked in July to an all-time high. But yeah, then it dropped again, of course, with the recent price action. So it's now, my portfolio value is now less than it was at the end of Q2, but only by 2%. And this is mainly due to the cash contribution. Without that, it would have been probably 7% down to 10% down compared to the end of quarter two.
Nice, some good results there. And what's interesting is I keep getting asked, I get asked this quite a bit. Are we buying in this market? I think you kind of prove that you are still buying consistently, no matter what.
I bought probably twice as much than I usually do. Well, at least 60-70% more than I usually do. And yeah, that's just from the money still that I have a bit on the side. I'm just bringing it forward. And yes, of course, come on, it's a candy store. Who wouldn't want to buy stuff?
Nice. Good. And have you done any option trading or anything this month? No,
I didn't. In these kinds of markets with so much volatility, I don't write any put options because I learned from the COVID crash that it's just too much gambling for me then. So I do this usually under less volatile times, and that's why I still have option outstanding, let's say Intel, and I can make $1,000 loss on that, right, at current prices. So I want to roll it over so that it becomes a $500 at current price if possible, maybe half year out, because I can wait. I'm not in a hurry with Intel. We know where it's trading right now. The earnings report is coming out as well, so yeah. Other than that, nothing really. Just option expiration, so to 300 euros or something like that.
Nice, good job. You're right. You were ahead of me with DCC, but you did call me out on Twitter if you remember, and I did take the opportunity to buy them. But that's some good results. I'm looking at your year-over-year growth actually on your slide here, and I mean, even though your portfolio is so large, you have a dividend income year-over-year growth in May of 121%. I mean, that's still
that was August. Sorry, that was August. But and that was really, really good August, because also I started investing in some other companies over the last year, so some other months are just doing better. And September came already from a really, really high number compared to last year, because September is after May my biggest month. But there's also dollar exchange rate in here, so my average grew with 47%. I bet that it would have been 30% if under flat currency, let's say.
Yeah, I get you. Nice job. 3.8% yield. This seems quite low in the current market. You're going to be shocked when you hear my one. It's a little bit more in line than what you've been hearing online.
Yeah. So there's one catch to it, right? I have 10% or something like that also in non-dividend stocks. So if I would take that out, then probably my yield will be 4.2 or something like that, more around that. But I've got Microsoft, Apple, and they really bring it down. So it's a lot of share price appreciation in there.
Yeah, which obviously more than makes up for the dividend yield whenever you want to sell them.
Exactly.
But good results overall. My portfolio yield is currently at 6.9%, which I was quite shocked about. But I did have a couple of options that were settled last week. There's two shipping companies there. One called GSL, it's Global Shipping Lease, and another one is Genco, which they both have about 8-9% dividend yield as well. So they really brought it up. I bought some AbbVie, some HPQ, some Intel, some DCC, and some T. Rowe Price as well. And there was also some shares of ZIM, which again was option trading. So a lot of mixture between options and dividend stocks. But overall, I spent a significant amount compared to the month to the previous quarter, actually. Mainly, I'd say due to options on the two shipping companies. I 300 shares between the two, which is quite significant amount of dividend income as well that they pay. And the shipping industry at the moment, I don't know if you follow it, it's quite beaten down at the moment. And I wouldn't say I'm an expert in it, but there is certainly people that I follow that know more about this. Jay Meister or something like that. I'll tweet his name or something. He's quite knowledgeable about it, and he gives a lot of insight in these companies. If you ever want to read about them, it's definitely worth doing. But in terms of dividend income, it was actually, look, it was okay. Averaged about €100 a month. August was quite low. It was actually only 81, but it's always been a low month for me. I think it was €56 last year. So it's still going up, but it's one of my lower months. July was obviously my best month, and September again was around 80. So I'm in around 150 to 100 to 150 at the moment. The option income is still far exceeding. So I made €489 and $142. So if putting that into euro, it's about 600 euro in total, which is not bad compared to my dividend income. It's nearly 3x my dividend income. So there's still a significant amount in the difference. It's just a lot harder at the moment because I'm now exposed to companies like VFC, which I told you I have to keep rolling these guys over. Like your dilemma with Intel, I have these at 42.50, and they are now trading under $30. So there's going to be a big loss if I take it. So I'm going to keep rolling it maybe and see if they'll come back. But they're certainly not going to come back if we hit we are technically in a recession, but when the recession is announced officially, they're not going to come back anytime soon. So it's a case of trying to manage some options, which is going to be more difficult in a bear market than it is in a bull market.
But your strategy is different. I really only do options on stocks I want to own. And what I do is actually, because I think Intel was then trading at 40 or something like that. So I sold an option at 35, knowing that day I wanted already at 40. Yeah. So I really postponed my decision. Of course, the psychology kicks in now when you see the price.
Oh, of course, yeah.
Yeah.
Of course.
But that's why I feel like it's for me also a bit easier to just own the stock if I would like to buy. Of course, I want to roll over because I'm not in a hurry. But it is more like, I don't mind owning another 100 shares. And
well, I don't mind owning VFC. To be fair, if I was to compare them to Intel, they probably have a stronger balance sheet. They've paid dividends for 40 odd years, so I have no real worries on that sense. My only worry is that it is the type of company that will get hit with high inflation and a recession because of what they are. People don't want to go for brands, but I mean, they've come through numerous of these. No doubt they'll come through this, but it's just the pain of. You're right. It's that psychology. I would have bought them happily at 42.50 when they were there, but now they're trading at 30. I don't want to own them at 42.50. I want to own them at 30. But it's about being price anchored. But I mean, look, it was a decent quarter for me. Dividend income is lower. It's certainly getting a little bit bigger, but I'm not seeing as big of an increase. Maybe because I probably have when I put my money in now, there's a little bit going to options and a little bit going to dividend. But on the other hand, then I'm making far more money from options than I am dividends. So the income stream is going up. My projected annual dividend income has actually gone up 1.5%. So it was hovering just under 9. And now it's at 10.8. So that's after improving. But again, I have high yielders in them, and I have 2 shipping companies which I'm playing with options with as well. So again, that will fluctuate over the next quarter as well.
What is really nice is just to follow your journey and how you're growing this. So you're now at 10.8%, right? That's what you mean of your future target. I mean, it's really, really going well. And you're using your option income then to fuel again the spin wheel, right?
It keeps going. And I really genuinely feel there's a huge opportunity here to nearly double that over the next 18 months with the way the market is. But it's just, it's part of it is not being too greedy. and just
Yeah.
trying to pick quality companies. I mean, BASF is a company that's in there. I got them at like
Yeah.
6% yield. I mean,
Yeah.
that's I would
Exactly. And then you own those companies at 6-7% yield, so that you get plus the
yeah,
option income, right?
exactly.
But again, option income is really for more advanced trading because you do have a lot of capital at risk with this. And I want to say it especially because we've been now talking for, let's say, 20 minutes about option trading as well.
Yeah.
And for me, this is really like a do not try at home kind of recommendation, because people that are in the first 2 years of investing, they might feel like, oh, he's doubling the income from options. But if you get margin calls, you're screwed. You will need to sell your portfolio, right? So
It is extremely hard in this market, extremely hard, and you have to be. You're right. You have to be careful with companies, and I've changed. I've changed over the last 18 months, maybe 12 months, where I've been picking high premium, similar to like dividend investors. We go for high yield, it was high premium. Now I'm picking companies that pay sustainable dividends that I don't mind having in my portfolio. But it is you're 100% right. It is definitely not for the faint-hearted and not for beginners. Dividend income is slower, 100% slower. It'll take you a little bit longer, but the compounding is there. You can see the results. I can post a chart of mine or your growth. Actually, it does grow exponentially, and as you said, yours is starting to make meaningful contributions now. When you're reinvesting, it's nearly an extra month a year, so you're nearly getting 13 months for the sake of 12 months a year investing.
Sure. Anything you're proud on from the new additions?
So I had HPQ outstanding. I was patient, and I got them, I think, around 25. I think I got them at.
Nice.
And then I just keep adding to T Rowe price. So I've always said I wanted to keep
Yeah.
adding to them. So I'm doing that slowly. One I did miss, and you brought it back up, was Siemens. I think I really want to own Siemens, and they dipped under 100 again.
Yeah.
So I think I might put an order in on them tonight, because I've been saying I'm going to buy them. I just keep forgetting, but. Yeah, I think the consistency with T Rowe price is probably one, and one that I missed this quarter is Texas. They're another one I want to add a little bit more of. So it's getting close to payday, so I'll be investing again at the end of the month.
Nice.
What about you?
Yeah, for me, that I'm the most proud on is that I added some realty income last week or 2 weeks ago, like the 27th of September. I bought some just under $60, and this position is still too small. And I would like it in the low 50s. But I felt like let's nibble in a little bit. Like this realty income, it's such a nice dividend stock, and many people don't understand it. But if you've been following it for 6-7 years, you see the predictability. You see, if you go just open up the investor relations website, it's like dividend investor porn, how they write. Yeah, it's like it's all for us written, the whole way of management. It's so aligned with a dividend growth investor. So I'm really happy with that one, that I was able to increase a little bit again my share in the portfolio.
Well, they're not called a monthly dividend company for no reason. I mean,
True.
I mean, how many consecutive quarters now they've raised it? How often? It's
yeah, and they started now also increasing their portfolio in Europe, right? They see this as an opportunity. I don't only know if this is like diversification or diversification.
Yeah.
Because if I look at the European real estate market, you need to really, really understand how this market works here. And for Realty Income, as an American company, they better get some really, really good real estate investors from Europe that understand the market and don't come in with an American philosophy thinking like, we'll own this market.
Yeah, it's so different. You got so many regions. I mean, we spoke of Germany having problems, Scandinavia having problems, but you look at the Irish market. Honestly, the Irish market looks hot and still strong from a property point of view, which is crazy given the valuations. But it just doesn't look like it's slowing down over here at the moment. Purely on a supply and demand basis. The demand is there, and they're just not building houses, so. There's different dynamics all over Europe, and if you're going to have the American philosophy coming over here, probably not going to work.
Yeah. So we need to keep an eye on that, also on the yields that they are getting out of it, because it's
Yeah,
tough here. It's tough.
but it's probably going to be a small part of their portfolio. I mean,
Well, they see it as their growth opportunity, right? I guess
yeah,
for them, America is a bit saturated, so let's go to Europe. But doesn't mean that Europe isn't saturated. We've seen these real estate companies like what was it? Is it the commercial real estate company? They are listed in the Netherlands. I forgot the name, but they also had to cut the dividend during COVID and such.
yeah,
So it's not easy to find shopping malls here and these kind and do a deal. I don't know, let's say with Ahold Delhaize or something like that. So
yeah.
anyway, we're starting to rant. Don't want to bore the people to death that are listening. Really well done, Derek. Really nice to see the progress. And let's have a good last 3 months of the year before it's 2023 already. And
Yeah.
let's hope that the market tanks another 10-15% so that we can, snoop up some of those nice dividend stocks.
Exactly. Hey, we have another portfolio review this week actually, from Dividend.exe. And I'm just going to go through some of the maybe the top 5 positions. He's got maybe 30 or so positions that he gave us, but he's top 2 at both ETFs. So you got the Vanguard FTSE All World High Dividend ETF, and then you've got the High Dividend Nordic ETF. I'm not too familiar with the Nordic one, but he's also got some Swedish companies in there. So there's one called Investor. So it's ticker symbol INVE on the Stockholm Exchange. He's got Microsoft in there, and he's also got Brookfield Renewables in there. What are your first thoughts on his overall portfolio? I know I just named 5, but
yeah, what I really like is that he has 15% as a core in ETFs. Yeah, all world, and then a Nordic high dividend. I really, really like that because it means like he has a stable core there. When it says high dividend, those are usually not dividend growers, right? They are, let's say, usually giving you 5-6% yield or something like that, or 4%, depending on where the stock market is. But if you then look at the dividend growth charts over the years, you see that it fluctuates a little bit with how the market goes. So that's important to know. So with that, it's also a little bit of a warning that if you own such ETFs, you need to build in a margin of safety at retirement. So if I would have my whole portfolio of such kind of ETFs, I will probably put a 30% margin of safety in there if I would need to really live on every euro coming out of those ETFs, because in a bad year, it might be cut about 20 to 30%. Yeah, you don't want to be able to sell your portfolio then. And after that, Investor AB, from what I understood as well, it's like again an investment vehicle. So it's in itself, it's probably also a small ETF with just not so many stocks in there.
Yeah.
Then Microsoft, okay, man, who can complain about Microsoft? And then Brookfield Renewables. So I think it is a really solid core for the foundation of the portfolio. What I just miss again is, besides Microsoft, some exposure to the classic American dividend growth stocks, like, for instance, Johnson & Johnson and, for instance, PepsiCo. I'm really missing that a little bit in the portfolio here. We can also see from the others there's a lot of Swedish exposure, home bias. Actually, home bias is really not bad. Sometimes people say that home bias, but home bias isn't the excuse. Come on, you live in the country, you know the companies, they're in the news, you can follow them, you can go on stock safari, you can see them, you can smell them. Why not have a majority of your home country stocks in your portfolio?
it's actually one of my favorite things about his portfolio is that he's got a lot of companies from his homeland. I mean, you're right. You understand these companies. There's a company in there that really interests me called Evolution. It's around online gambling and stuff, which you know is pretty huge. Has huge potential. Again, I would never know that company. It's based on the Stockholm Exchange, but I just love that he has so many, and it's not top weighted. I mean, it's not like he's top 5 or all. If you look down in his tiers, they're scattered. He has 2%, 3%, 4% of his portfolio, but I think it's a really nice mix. He's got Realty Income in there, Dutch Shell, L'Oreal, which I know you're probably jealous of. Medtronic, Nike, T. Rowe Price. So I think it's a nice balance. I don't necessarily agree that he needs to go out and have those Johnson and Johnsons and stuff. I like the balance that he has, and you're right. I think the ETFs, the two ETFs, gives it a nice proportion as well. So I know I actually think it's a good portfolio. There's not one company that I know of that I maybe wouldn't have in there. As I said, I don't really know the Stockholm ones, but certainly the rest of the European and US companies, I think they're all good companies, good prospects, and I think it's a good portfolio.
Yeah. So Dividend exit, 20 years to go, on the right track. You heard my thoughts, Derek thoughts. I hope it helps. And thank you also for submitting your portfolio. To the others, if you would like us to have a little bit of a look at your portfolio and share our thoughts with you, feel free to submit it. I think we have one outstanding still for next week, but the next who comes is the next in line.
Okay, we'll move on to some questions. We haven't got too many this week. So the first one is from Jan Ricard, and he has asked, do you have any insurance companies on your shopping list?
Yes, Allianz. I'm waiting for Allianz. What did I put the was it 154 point something? I don't remember, but or 158, but exactly at the 7% yield. I remember I put in a buy order.
Yeah, I think you said that last week. Yes, 7% yield.
And Munich RE is already outstanding as a buy order for like a month or something like that. But the price just doesn't go down. I think it's in the low 200s and still in 240 or something like that. So it would need to drop a lot. But Munich RE, I would like to own some more as well.
Cool. Martin has asked us, we have previously discussed war chest on the show. Is the time now to at least put half your extra cash to work? I would say that you are timing the market by keeping cash on the sidelines. What's your thoughts?
He's right.
Yeah, but it doesn't mean you have to put all your war chest in at once. I mean, you can put in a little bit extra each and every month. But you are right. I had this discussion with I was on with Matt and Guy. They have I'll share, but they have a podcast and a YouTube channel, and one of the things they asked me was I fully invested, and pretty much I am. I explained to them my strategy, but I'm nearly always invested. There's a little bit there on the sidelines, but I'm nearly always invested. That war chest, I suppose. I know I bought a car. I had to buy a car. It broke down. That took a big chunk, but other than that, I've got a bit on the sides, but I think staying invested is probably more sensible for me.
Yeah, so I still have some money on the side, and he's right. I'm, like I mentioned before, I'm deploying more cash now into stock market, and I will continue to do that at these prices, not all at once. Although I'm flirting sometimes with lump sum investing, I guess I don't have the guts for it to do it because I can't time the market. But like he says, on the other end, not investing is also kind of timing the market. So, I mean, I'll have to become an adult on this topic one day.
You certainly will. The next question we have is from Bernard, and he's asked us, what is happening with MPW? MPW are a medical REIT, if I remember correctly. And we just discussed on this earlier what's happening with real estate, and you could imagine high interest rates, inflation, all that is that. I don't know the exact ins and outs. I did look at their price chart just to see. It does look like it took a bit of a hit, but again, it's not the best environments for REITs. So unless you fully understand it, it's hard. But it's literally it's after going from $22 at the start of the year down to under $10. So it's
okay. Yeah, I don't follow the stock, Bernd, so I would not do you a favor by just looking quickly at the news and telling you. So
yeah,
I really don't follow it.
Yeah, so, but I'm not really surprised to see it drop given the structure of it. But I would definitely, if you own it, I would definitely look a lot deeper into it and see if you're comfortable owning them, because it looks like they're turning into a penny stock. Next Gate has asked us, you get 15% less dollars now from a year ago. that is a big hit on buying power. He don't like it. He buys European instead. What is the list of best DJI European stocks at the moment? I mean, you just got to check out the Noble 30, don't you?
Yeah, it's in the Noble 30 next gate. So if you go to my blog, europeandgi.com, you will see 30 stocks there. You will also see UK stocks in there. You will see several articles about European stocks. So have fun with those. But if you ask me at the moment, I like Castellum actually, but we discussed the risk involved today, or the unknowns. I like Allianz, also a high yielder. I like Siemens at the moment. I like ASML really much, specifically if it touches 400. I will buy at least one share again. Yeah, I mean, it's also a candy store in Europe at the moment. There is so much to buy.
Yeah, Siemens, as I said, is hot on my list now. I think it's a fantastic company. And actually, one thing I do is you haven't released one in a while, but you usually do your 10 favorite stocks from a company or from a country.
Yeah.
And I always put them into trading 212 pies. And I don't report them here actually, but every month I put in money. So I have two. So I have the Dutch one, and you did what other one?
The
UK one, yes. So I have both of those in a pie, which is quite interesting. So
I'm writing about it, and you're earning money on it.
Yes, exactly. Yeah. Hey, you're doing the research, and I'm taking all the gains. But
yeah, nice one. And maybe I was looking also at Legal and General that we discussed last week in the podcast. I'm also looking into those because around 10%, for an insurance company. We got, by the way, a question about insurance company earlier. Who was it? From Jan Rakkar. So add Legal and General to the list as well when it comes to insurance companies on the shopping list. And the nice thing is about British company is 0% tax. So I pay the tax in Poland 19%. So it's just from an admin point of view much more easier to buy UK stocks.
Nice. Cool. So that was it. Not many questions today, but thanks a million to everyone for the questions. Thanks for submitting the portfolio review as well. We kept this quite short. We recorded it late. It's late on a Sunday. But appreciate everyone listening and waiting for the episodes to come out. So hope you enjoy it, and we will see you all next week.